prices and the semi-finals to the 2019 elections, all of those conversations coming up.
You are seeing some interesting moves in the aviation and oil marketing counters. Neeraj is here with a closer look of that and the other side of the market as well. Neeraj.
Hey guys, afternoon. So bad day of trade yet again for the Sensex. At least we were down about 1% yesterday, and while we started off okay, maybe because of the crude price cut, we're still down about 1% as we speak, at least on the Nifty 50, or at least on the Sensex. The Bank Nifty is providing a little bit of a respite, but I must talk about the pressure points first. And Nifty IT, clearly a big pressure point. Almost all of the IT companies today, large cap, mid cap, even small cap names, have corrected quite strongly in the session today. In fact, since September end, there has been a 12 or 13% pullback in Nifty IT, with stocks like TCS and Infosys falling almost 17-18% apiece. So clearly some pressure points on the IT names today. Reliance is under a bit of pressure too, despite the fact that the BSE oil and gas space, as Harsha stated, has done reasonably okay. So BSE oil and gas is doing okay. Reliance is not, and I think, okay, that too has come off, arguably because of pressure from Reliance. But yeah, OMCs, Harsha, you're right, they've done well. The aviation companies, when we started off trade, were doing reasonably okay for themselves. To Indigo at a point of time was up about 4%, Jet Airways is up about 5% currently. SpiceJet was not doing all that bad. So the aviation companies have done okay, and the paint companies have not done too badly. So Asian Paints, Berger, Kansai, etc., all of them did well. So essentially the crude price beneficiaries have had a really good run in trade today. IT is not. Reliance is under a bit of pressure, and banks are giving that support. Frankly, a lot of action is concentrated in the large cap space.
All right, Neeraj, thanks so much for that. We continue to analyze the outcome of the RBI Central Board meeting earlier this week, both the structural outcome in terms of what it means for the functioning of the Reserve Bank and its board, but also some of the individual issues that were on the table. Joining us now to help us with some of that analysis is Mr. R. Gandhi, former Deputy Governor of the Reserve Bank of India. Mr. Gandhi, thank you so much, sir, for taking the time to speak to us. So I want to start with the big picture first. I think one thing that everyone is pointing out after the board meet is that the board this time was involved in operational decisions, whether it's the pushing back of the capital conservation buffer under Basel norms or advising the RBI to look at a restructuring schemes for SMEs. It does look like the board is now taking a form which is far more active in actual decisions rather than just advising the Reserve Bank, sir.
I don't think so, and in the sense that board has always been advising the Reserve Bank, only that this time it has come out a little openly. Otherwise, also earlier on every issue, there used to be a very healthy discussions during the board board meetings, and sage counsel from the board members would always be listened to by the Reserve Bank. So whether it is for liquidity or specific sectors, there has always been discussions in the board. So this time also, obviously, the board has discussed, because there is a current topic by which the government wanted the board to discuss about the liquidity flow for the NBFC sector or SME sector. So obviously, the collective wisdom of the board has been prevailing upon, and the Reserve Bank also has come out with certain modification to either the SME sector or with reference to the capital adequacy. So after listening to the board's suggestions, Reserve Bank would obviously taking decisions and accordingly giving instruction to the banks and the financial institutions.
Okay. Mr. Gandhi, one of the other outcomes has been a committee being set up to review the economic capital framework or the capital reserve. What to your mind should be the factors that this panel should consider on how much capital the RBI needs to have?
Say, as a central bank, it requires reserves for and provisions for very many reasons, not just to take care of the fluctuations in its asset book, whether it be foreign exchange related fluctuations or interest rate related fluctuations. That is one part of the provisions and reserves the Reserve Bank should be building up. In addition, it should also be building up the contingency reserves for any contingency. Obviously, contingency cannot be foreseen what kind of reasons a central bank would require additional reserves. So there has always been, when the exchange rate movement goes to the other side, in the sense that if INR continuously appreciates, then Reserve Bank will be losing heavily on its valuation. So to compensate that, obviously one will be needing, the central bank will be needing sufficient capital to ward off such losses. Earlier, it had happened in early 92, 93, around that time when the FCNR, those days FCNR-A was there, which Reserve Bank had given a guarantee. And to ward off those losses at that time, Reserve Bank had to do certain things in the sense that shifted its liability to the government. All those things may not be needed if Reserve Bank itself had sufficient reserves in its books. So one will not be able to say exactly how much will be needed. Certain principles will always be required to be followed in the sense that in the market, there is a particular method of assessing a credit rating of a financial institution. So being a central bank, one would always like the central bank to be rated as AAA or even AAA plus. So to that extent, the reserves position of the central bank balance sheet will have to be sufficiently very sturdy, very strong. So that these are the principles one will be required to be discussing in those committees.
Mr. Gandhi, now, the terms of reference of this committee and the membership is still to be announced. Would your advice, sir, be that firstly, let's not look into the accumulated reserves, and if you want to review something, let's review the formula of future transfers, say, to the contingency reserve. And secondly, sir, it was pointed out that in the past, these committees which looked at this framework were entirely internal, RBI committees. This time, it looks like the government wants a say in the final formula.
See, whether the members of the committee are entirely internal or external, and where experts are being brought on, or the government representation being there, that is not something to be worried about, because wider discussions, because the issue has come out so openly. So naturally, wider inputs will be required. That's why in their wisdom they have decided to have a committee which will have not just the internal people and external people also. So external inputs are always welcome. It should be possible for them all of them to come to certain consensus what should be done with reference to the balance sheet of the Reserve Bank of India. Number one. Number two, the other question that it should be focusing on the future build-up of the reserves or future transfer of the surplus reserve. I think that is what's the intention. Even today, I heard that the government giving out a very clear message saying that they are only looking at the surplus transfer to the government, not the accumulated reserve transfer to the government. So that is all well in sync. That's what I would think.
Mr. Gandhi, can I request your understanding of another issue as well? And this is this whole Basel rules, where essentially they have pushed back the final tranche of the capital conservation buffer by 1 year to 2019 to 2020. Sir, it is being believed that that frees up about 36,000 crore in capital and hence allows for almost 3.6 lakh crore in incremental lending. But that's not the way to look at it, right, sir? I mean, because a lot of these PSU banks are even below the revised minimum. So the benefit in some ways only accrues to the few PSU banks which are, above the bare minimum and coming close to 8. And that also, whether it translates into lending or not, is a big question.
It is true. It is not a relief. If at all, it is only an additional 1 year time has been given to shore up their reserves. So it is not as if straight away CRAR has been reduced. CRAR has not been reduced at all. Only this additional requirement, instead of reaching in 2019-20, it can be reached in 2020-21. That's a kind of adjustment only has been done. So it has released additional capacity for expanding the asset book of the balance banks. Yes, that is for that 1 year. That's what we should see it that way only. It is not a permanent relief. So by just given little more time for the banks to expand their capital. That much only. It is not a permanent relief at all.
Okay. Last point, Mr. Gandhi, is on this SME thing. The RBI still has to come out with the full circular on what relief or restructuring can be done for SMEs. But, the point has to be made that after GST, the RBI already gave an additional 60 days for the NPA classification for SMEs. Then they extended it by another 30 days. So essentially 180 days was given. And now banks have started to see a rise in SME NPAs. Now, on top of this, to ask or look for further forbearance is imprudent. I mean, the regulator should not perhaps be in favor of that, sir.
So it is not the question of giving further forbearance. That is not the way I understand. What is required is that a special scheme for resolution of the SME asset books. So that is what is there. To what extent there can be a kind of not forbearance in terms of write-off. So if you remember earlier that in late 1990s, there was a scheme, RBI scheme for one-time settlement of the small finance, SME finance related NPA. Something like that only. I think that is what everybody is looking at. Not exactly giving forbearance in terms of whether the NPA should be recognized within 180 days or a longer date. I don't think that is what is the intention. Intention is that how deep, if at all, any of our haircut the bank should be doing with reference to SME financing. That's what should be the scheme which they must be working on.
So not like a waiver, sir, just like a one-time settlement scheme is what you would think would be in the works?
That's correct. That's my hunch. That's what they must be working on. How quickly the outstanding NPA, SME NPA can be quickly resolved, so that the SMEs can come back to regular financing, financial support, and further productivity can be increased. That's what I think.
All right, Mr. Gandhi, we leave it there. Thank you so much indeed for joining us today with your views. Mr. Gandhi, the former Deputy Governor. Crude oil drops to a one-year low as energy traders brace for an OPEC-induced sell-off. WTI is trading around $54 a barrel, while Brent is hovering around 63.40 to be at this point. Investors are worried that major producers will forego output curbs like it's 2014 once again. Is this temporary? Will OPEC allow prices to continue to trend lower? Mriganka Jaipuria of S&P Global Platts now joins us on the phone line. Mriganka, thank you so much for joining us. What are you making of this fall in oil prices? Is this a temporary blip, or is the trend headed downwards?
Well, if you look at what happened back in October when oil prices hit close to $85 per barrel, was that the market was very focused on bullish factors, mainly the uncertainty surrounding Iranian oil. Once the sanctions took effect in November, now the focus has returned to supply side factors and, rising production, whether you're looking at the U.S. or Libya, or the fact that Iran will continue to export oil for at least another 6 months. And the rise in OPEC and non-OPEC production is what is driving prices lower at the moment. Looking forward, it would all depend on what the OPEC and non-OPEC countries decide when they meet in Vienna next month. Saudi Arabia has said that it will be cutting production by about 500,000 barrels per day starting December. But if you look at Saudi production in November, we are estimating it to be very high, in the range of 11 million barrels per day. So is a 500,000 barrel per day cut going to be enough? And, are these producers ready to roll back their production hikes and give up their market share? So there's a lot of questions that OPEC and Russia have to consider before the Vienna meeting.
It's trading at about 63 as we speak. Any near-term price levels that you're watching out for?
So according to Platts Analytics, which recently revised down its Brent crude oil forecast to the lower end of the $70 to $80 barrel range, now I'm looking at like a medium-term average price with a downside risk to about $65 per barrel. So that's what we are looking at. That's what Platts Analytics is looking at.
Mriganka, we leave it there. Thank you so much indeed for joining us. That's oil for you, trading at about 63 on Brent, and the trend seems to be headed downwards.
All right, now the drop in oil is definitely going to come as a relief to Indian aviation companies who have shot off a letter to the government seeking emergency credit. An association representing four of the largest private airlines in the country has cited rising aviation fuel prices and discounts while asking for credit from fuel companies and airport authorities. Jill Ward of Bloomberg News joins us with the details. Jill.
Hi, thanks for having me. It's the latest sign of the crisis really facing airlines in India. Carriers are asking the government for help with obtaining emergency credit from oil companies and airports. Bloomberg obtained a copy of the letter from the Federation of Indian Airlines sent to the Aviation Ministry last week, asking for assistance in getting a penalty-free 1-month unsecured credit line from oil companies, the state-run Airports Authority, and even private airports. And that federation consists of Jet Airways, Indigo, SpiceJet, and GoAir, which together account for about 80% of the domestic market. They say that the depreciation in the rupee, taxes and jet fuel, and of course the price of crude are all weighing on their profits, and there's a mismatch between the input costs and how much they can charge in fares. So intense competition and aggressive pricing are preventing them from raising fares to reflect those higher input costs.
Jill, many thanks for joining us with those details. Jill Ward reporting from New Delhi. The country's largest power generator only wants to extend its lead over others. State-run NTPC is said to have shown interest in acquiring two stressed assets currently owned by Ratan India. A strategy has been laid out by NTPC's top brass at a recent analyst meet, it seems. Yatin is here with some details on whether it makes sense for NTPC to go shopping at this juncture.
Harsha, yesterday Bloomberg News reported that, NTPC is doing due diligence for various power plants across India. Largely, these are stressed power assets, including two of, Ratan India and one Nigri power plant of JP, Power. If you look at the reasons why they are looking at inorganic growth opportunities, is the fact that we have seen good growth in electricity demand. In fact, we had seen a power demand jump of nearly 6.5% year to date on a year-on-year basis. And not only that, we have the government's rural electrification drive, as well as rising industrial demand that has been aiding, the electricity demand. Not only that, we have NTPC, which has been always talking about acquiring stressed power assets and also is looking to increase its captive coal production in order to feed the new power plants as well as the stressed power assets, which is a good likelihood moving ahead. As far as NTPC's power capacity addition plans are concerned, they are already executing projects worth 20,000 megawatts and more. More importantly, we have the company's cash, which is expected to swell almost to a level of 5,000 crores by the end of financial year 19, according to analyst expectations. And more importantly, they also have a healthy balance sheet, which will help them leverage moving forward in order to fund these acquisitions. In fact, the Bloomberg report suggests that, Ratan India's Nashik and Amravati power plants are the two locations wherein NTPC is looking to do some due diligence, and also they are looking to acquire the MP-based JP Power's Nigri power project, which again is a stressed power asset, but has a very large thermal capacity. Of course, there are various conditions according to the NTPC management in order to look at these power projects. Number one is the rail connectivity and the transmission infrastructure, and more importantly, the plant should be operational. So they are looking at certain assets which are already generating some amount of power, and clearly on the valuation front also, from the investor standpoint, NTPC is only available at 1.3 times price to book when you compare it to the peer set like CSC or Tata Power. Of course, Tata Power trades at a lower book value given the fact that they are making losses at the Mundra power plant, and brokerages also have been bullish on NTPC. In fact, if you look at Edelweiss, GM Financial, Motilal Oswal, all of them have a buy rating on NTPC with a target price in the range of 190 to 195 rupees.
All right, Yatin, thanks so much for that. Dr. Reddy's is all clear to launch the generic version of Suboxone. A US Court of Appeals ruled in Dr. Reddy's favor in a patent litigation. Darshan Mehta joins us with the details and what it means for the company.
Yeah, it's positive. That's why the count is reacting almost 8% in today's trade. No doubt this was there for a while. What happened was in the first quarter, Dr. Reddy's launched this drug. They had only 2 days, after which again there was a preliminary injunction that came in. So in 2 days they sold $25 million worth of this drug. It's a big drug. The IMS size is $1.8 billion. The brand size is $900 million. Endeavor is the only one that's selling it. So that's a large opportunity for Dr. Reddy's, even though there are other competitors who still have approval. Some of them have tentative approval, some of them don't have approval, but none of them have launched. Dr. Reddy's was the only one that managed to launch. So what happened in the first quarter, they sold $20 to $25 million. In the second quarter, they didn't launch anything. That's why the US sales number were extremely weak, and the management said that approvals in such drugs are needed for them to grow the US business. So that has come in. So Dr. Reddy, as in a statement, has said that they are now ready to launch and they will launch it. But remember, it's done at an at-risk launch, which means that still the patent is valid. There are other companies that could launch it, Teva and Mylan, but there's no communication as such whether they have launched it or no. Brokerages have given this the thumbs up. They believe anywhere between 80 to 90 million dollars, 90 to 100 million dollars could be the potential sale from this drug. EPS estimates have been raised by anywhere between 20, 30 rupees to 50 rupees. because of this drug that's come in. So across the board, be it an Aquarius, be it an Edelweiss, be it Credit Suisse. Credit Suisse believes that the drug competition will come in. So all of them have raised the target price. It's extremely positive for Dr. Reddy.
Darshan, thank you for that. That's Dr. Reddy's for you. Let's talk about politics now. The people of Chhattisgarh have cast their votes and will now have to wait for at least 20 days before they find out which political party is going to form the next government. It's the first of the 5 assembly polls in the country. Next in line is Madhya Pradesh and Mizoram, followed by Rajasthan and Telangana. The outcome has larger ramifications as well, with general elections less than 6 months away. New alliances have been formed, with the Congress and the TDP in Telangana, for instance, joining hands, posing a threat to the otherwise formidable TRS. The BJP also has a lot at stake, especially in Chhattisgarh and Madhya Pradesh, 2 states where it's not lost power in the last 15 years. Joining us to make sense of all of this, the latest surveys and the possible outcome, Sanjay Pugalia, Senior Journalist, Editorial Director at Quintile Media. Sanjay, always a pleasure having you. Let me begin this conversation with Chhattisgarh first. Raman Singh has been in power, he's been a popular leader, but he's up against a formidable alliance between Ajit Jogi and Mayawati's BSP. What's likely to happen, you think?
Right, last sentence I could not hear, Harsha, but I understand your question. Ajit Jogi factor we might have kind of over-assessed. I'm going by his own statement when he said that never in my lifetime I will join hands with BJP. The whole idea was to make sure that he gets enough seats on his own to have some bargain power, either be part of a BJP government or a Congress government, or maybe try to hope and try to replicate the Kumaraswamy model. But that doesn't seem to be the case. High turnout in Chhattisgarh gives some indication, especially in the most remote rural areas, that may not be a very good news for BJP. But Raman Singh enjoys a great image, and everyone, all assessments anecdotally and the survey numbers are saying that it is a very close race with BJP still having an edge. So Ajit Jogi factor might have helped to some extent, but not to a great extent. Ajit Jogi and Mayawati aligning there in that state in the context of UP was a big news, but maybe on the ground level, it doesn't make much sense because there are clear choices between BJP and Congress. So that is the Chhattisgarh story.
Let's talk about MP now, Sanjay. Opinion polls have called a close contest between the BJP and the Congress. BJP is obviously fighting incumbency as well because it's been in power for a long time. The Congress is also fighting infighting. Which way do you think the wind is blowing in Madhya Pradesh?
The sanctum sanctorum of Congress infighting has been Madhya Pradesh. But actually now the kind of stories we are hearing from Madhya Pradesh suggests that Congress is in little better shape as far as the election season is concerned. But last 15 years, they had a severe problem of not having cadre at grassroots level. That might create a problem for them. And BJP has a well-oiled machine everywhere. But there is definitely a fatigue factor about the MLAs and ministers. So there is one anti-incumbency working against these individuals. Shivraj Singh Chauhan anti-incumbency as an individual chief minister is not very strong, but the aspiration of people is too high. And a new factor that has emerged in Madhya Pradesh, which was not the case hitherto, was the rise of upper caste led by Brahmin community in Madhya Pradesh that resulted in a party called Sapaks, which is headed by an ex-IAS officer in that state. These all elements we thought will be basically vote-cutting mechanism to help BJP to sail through. But there is a definite anger against BJP because of the SC/ST Act. BJP doesn't look to be very comfortable in the Madhya Pradesh. The rebel candidates are in large number for BJP also. So the whole vote-cutting mechanism to chip away some votes from going to Congress may not work because BJP also is facing same dissident, rebel candidates in large numbers. So all these vote cutting mechanism will neutralize, it will basically cancel out each other's gain or loss, whatever you want to call it. The race appeared to be very close. I do not believe that race in Madhya Pradesh is close. Whichever party wins will win very, very comfortably. So close, when we say, basically means that Congress was not in a great fighting position there. Are they doing a good job? Yeah, they are doing a good job. Are people very angry? People are very angry in that state. Why they are angry? Basically farm related distress, joblessness, because Bijli Pani Sadak problem has been solved in Madhya Pradesh. That is why BJP has come up with a new phrase, that is Samriddha Madhya Pradesh. For Congress party, winning Madhya Pradesh or Chhattisgarh or Telangana becomes very critical. That is why we all are watching Madhya Pradesh, because Rajasthan is now, everyone has discounted. Be it you or me, Harsha, be it our investors, be our trader viewers, be it Mr. Modi, be Mr. Rahul Gandhi. Congress has assumed, and everyone has assumed, that Rajasthan is coming to them. That is not going to help in terms of 2019 election. What is more important now, that Congress must have one more state, at least one more state in its pocket. That is why everyone is watching Madhya Pradesh very closely. As far as illegal betting markets are concerned, they are showing Congress having an edge, but we don't know.
Okay. I have one final question, Sanjay, and since you've spoken about Rajasthan, in Telangana, the impossible has happened. The Telugu Desam party has joined hands with the Congress. NTR must be turning in his grave. How does this change equations, A, for Telangana in particular, and for national elections in 2019?
Again, your voice broke, but I will try to answer that. Telangana, we thought that it will be absolutely comfortable, a cakewalk for KCR. That is not the case. It is a very tough battle that he is fighting, because the alliance has shaped up very well. YSR doesn't have any relevance there, YSR Congress. But even Chandrababu Naidu is not a big player in this state, but still having an alliance has enthused the Congress party cadre to a great extent. Congress party and this alliance is really giving a good fight to TRS, and it will be really, really very close call. Tough time for Mr. KC Rao. This gives a great message for the opposition parties, which is in a great disarray, and they are not still kind of organizing themselves well. So Mr. Naidu taking a lead and trying to orchestrate or coordinate the entire opposition unity is something that is a significant development vis-a-vis Telangana. Telangana election has made that possible, but it has serious implications. You have seen that Mr. Naidu has traveled to Kolkata to meet Mamta Didi, and Mamta was trying to actually play the same role, that she wanted to be the figurehead of the whole opposition unity. But Mr. Naidu, by clarifying that he is not the prime ministerial candidate, has made things easy for him, and that is a great news. Watch Mr. Naidu closely. If Telangana results are kind of not good for TRS and Congress and TDP does well, it will have serious implications in terms of forming and cementing a good opposition alliance.
Sanjay, always a pleasure. Thank you so much indeed for joining us today with your perspective. Thank you so much.
That's a wrap on this edition of Power Lunch. Thanks for watching.